Most people talk about the Federal Reserve cutting or hiking interest rates, and they lump in mortgage loan rates and other like commercial property loan rates under that big umbrella of interest rates. But the Fed does not control mortgage loan rates or other property loan rates. The Fed controls something called the federal funds rate, which is the short term interest rate that banks use to lend each other money overnight and for other short term purposes. Mortgage rates and other loan rates are based on Treasury yields. So the way they're priced is, the Treasury bond yields plus a premium, a risk premium, or a spread above those yields. And the Federal Reserve has no control over mortgage rates. Therefore, now there is a historical correlation, of course, between the federal funds rate and mortgage interest rates, but it's just a correlation. There is not a causal effect there. It's really the causal effect is based on Treasury yields. And neither the Federal Reserve nor the White House has any control over bond yields. I mean, bond investors have control over bond yields. And you could see this last year when the Federal Reserve cut interest rates several times in the fall of 2024. And what happened? What happened to mortgage rates? They went up, even though the Fed funds rate went down. So these do not always move in lockstep. Now, there's been all this discussion about how much influence the White House and specifically the second Trump administration does have, should have, can have, over the Federal Reserve as the central bank. And, that quickly gets into, a political conversation that, I'm not here to weigh in on politics. I'm here to talk about money and investing. But there's been a big discussion about that throughout 2025. President Trump has tried to, threaten and coerce and bully Chairman Powell to lower the federal funds rate. He tried to fire Lisa Cook, and then that is now tied up in the courts. Whether it's lawful for the White House to have fired her, whether it counted as just cause, so on and so forth. And some of that will be determined by the courts. But sooner or later, the Trump administration will gain enough influence over the Federal Reserve to be able to push it to cut interest rates, to cut the federal funds rate. I think that's inevitable. I think most of us can agree on that, regardless of political spectrum. This is not a political question. It's a practical question of, sooner or later, the Trump administration will get enough influence over the Federal Reserve because they have the power to appoint Federal Reserve governors. And Chairman Powell, his chairmanship expires in May of 2026 anyway. But here's the thing. The Trump administration cannot bully bond investors or influence bond investors the way that it can bully or influence potentially the Federal Reserve. Now, here's what the Trump administration and the Federal Reserve can do. They can buy more Treasury bonds, right? The Trump administration, when they get some Fed governors appointed, they could push them to buy more Treasury bonds, buy more mortgage-backed securities, and that would potentially push mortgage rates down, indirectly, but still push them down. The Trump administration could also manipulate Fannie Mae and Freddie Mac. President Trump has talked about them going private once again. Right now, there are these quasi-governmental agencies, but they're backed by the federal government, and it's very weird and unique the way that those are set up. But President Trump could have some manipulation there, right? Like, I mean, he could say, all right, we're going to push them to go private, and as part of that initiative, we're going to ask them to loosen mortgage lending guidelines and, otherwise promote lower rates and more accessibility to homeowners who maybe otherwise wouldn't qualify. So there are some things that the Trump administration can do here. But at the end of the day, it's important that we all remember that neither the White House nor the Federal Reserve controls mortgage interest rates. The Federal Reserve controls the federal funds rate. And bond investors ultimately, at the end of the day, control what we all pay for mortgage loans, what commercial property borrowers pay for commercial loans. So bear that in mind. And there is only so much manipulation that the president or anyone else can do with bond markets because bond investors control Treasury yields. So anyway, hope you got something out of this conversation. We kept it quick today. It was, a little technical maybe, but just an important distinction to keep in mind if you're a real estate investor, whether active, buying rental properties, flipping homes, or passive like me, like we all get together in the co-investing club to vet passive investments every month. If that's something that is of interest to you, check us out. sparkrental.com/club. We also have a free course on how passive real estate investing works because it is new to a lot of people. It's unfamiliar to most Americans and most investors around the world for that matter. So check out sparkrental.com/free. A very quick, punchy, free course on 5 different passive real estate investments, how they work, what kind of typical returns you can see, etc. And if you got something out of this episode, awesome, pass it on. If you didn't get anything out of this episode, then let us know why. Email us at support@sparkrental.com and let us know what you want to hear more of or less of for that matter. And on that note, stay weird, unconventional investor.